Hey guys, and welcome to the Working Money Channel. BondCrypt XRP posting this with regards to Coinbase now. There's been a lot of controversy around Coinbase's decision not to relist XRP, and I get it. If you categorically state that Coinbase does not list securities, end of story, you are then confirming XRP is not a security. Well, Coinbase posted this, guys. They posted this as one of their blogs, and that is, in fact, the title. Coinbase does not list securities, end of story. And so why aren't they relisting XRP? He says, yeah, then you're confirming XRP is not a security and never was, right? If not, you would have never listed XRP on your exchange in the first place, correct? So that was the other thing, there is a rigorous process that Coinbase goes through. And if you guys remember, XRP was listed on the Coinbase exchange. The SEC lawsuit came about in December of 2020. And then by January, Coinbase said, okay, we're going to take this off the exchange for fear of whatever. And now, after the insider trading story came out just last week, Coinbase, I guess, is going in full defense mode, saying, we do not list securities, end of story. And of course, the XRP community is latching onto this, saying, well, why don't you then relist XRP? Makes a lot of sense to me. I'm going to keep tabs on what's going on here, guys, and I will keep you up to date. Want to keep moving. Like I was saying in this morning's video, a lot of information today with regards to RippleNet developments. In this case, XRPL Labs. This is something that's kind of new and fresh. Are you ready to learn some more, they posted? Then visit the Some Developer Education website, where beginning programmers can start to learn more about the XRP ledger. So if you guys are beginners and you're interested in programming, you can go to learn.sum.dev. And I will link this in the description for you guys if you are interested. And apparently, you can learn more about developing on the XRPL specifically. Some developer education is hands-on, so by following the step-by-step videos, you'll be able to write your first lines of code in a matter of hours. And along the way, you'll learn more about the concepts and internals of the XRP ledger. A big hand to our colleague here, who is Satish, who put a lot of work and energy to create this extensive library of videos. In the future, more videos will be added, so this is just the beginning. We wish everyone lots of learning and coding pleasure. And so again, just posting that link, learn.sum.dev. Matt Hamilton saying fantastic work. This is an awesome amount of educational material and very well presented. So for those of you guys who may be the tech types who want to learn coding more, this is a beginner seminar. You can take a look at the videos. I have not taken a look at all of them, but it seems like there's a lot of interesting educational information there. Again, for learning how to develop on the XRP ledger. So great news there coming out of XRPL Labs. And some more theories here, guys, about the SEC and their shady proceedings. This coming from Matt Belisarius 2020 on Twitter. There is no doubt that the SEC seeks, in the SEC versus Wahi, to establish a precedent for suing individuals who sell cryptos in the secondary markets for an unlawful sale of unregistered securities. So this morning I talked a little bit about John Deaton, the latest developments in the case, and the Bearable Guy carousel post from early this morning. I'll link that video up here if you guys didn't catch it. And so this kind of relates to that. Sure, it will say that it's seeking on this occasion to sue individuals acting unlawfully by insider trading, but it doesn't change the fact that the SEC argues the sales of the cryptos were themselves, apart from insider trading, unlawful selling of securities. Just think of the consequences. Buying and selling crypto on exchanges by individuals in secondary markets. So, Bill just kind of proven a point here. The SEC is looking to open up the lawsuits. It's like a slash and burn technique. He goes on to say, what are the consequences for exchanges who allow secondary market trading? The SEC can say what it wants about it not targeting holders of crypto who sell their coins for breach of securities law. But they just did, and they clearly assert, if there is any residual doubt, that any sales of a crypto are part of a common enterprise with the issuers of the coins and creators of a blockchain that potentially continue indefinitely regardless of utility, functionality, or decentralization. And again, guys, I urge you to watch this morning's video. There's a great clip of John Deaton in there talking about just this. This absolutely shows the need for John Deaton and Amakai to be permitted to remain in the Ripple case, and in my view, the need to be allowed an expanded and more active role. The SEC versus Wahi case shows the SEC's true case theory in the Ripple and Library cases, and it definitely, although they obfuscate and seek to hide it from the judges, extend to all exchanges and crypto holders in the secondary market. So guys, this is what we have to be careful of. This is why we need John Deaton now more than ever. We now see why the SEC has fought and continues to fight so hard to keep John out. It sets a precedent that can impact on future cases in which they don't wish the voice of crypto holders heard on issues relevant to the Howey test, which is precisely why John's role is taking on an even wider, almost providential significance for all of crypto that goes beyond the Ripple case. Let's hope that Judge Torres sees the wider public significance of John's involvement. So again, touching on this, I probably should have put this tweet in this morning's video. Nevertheless, I think it is good to get it out anyway. And if you didn't watch this morning's video, go check it out. Adam Levitin here, also making a point on Ethereum, something no one is talking about. After the merge, there will be a strong case that Ether will be a security. Okay, so despite this whole, the SEC trying to give Ethereum a free pass, what Levitin is saying here is that the token in any proof of work system is likely to be a security. So he describes a little bit about how he works, and we get all this. I think we've been following this long enough that we understand this. But this goes into staking, okay? Howie speaks of an investment of money, but that has always been interpreted just to mean an investment of value. Putting up a stake readily satisfies this element. The common enterprise element is also readily met with staking. The whole validation system requires multiple parties. That's the pooling, i.e. The more demanding interpretation of common enterprise, horizontal commonality. The expectation of profit is clear enough too. Stakers get rewards. So that brings us to the last element. The profits are expected to be derived solely from the efforts of others. In Howey, SCOTUS said solely a couple of times, and if that's the measure of things, then staking will not meet the test because the staker is also a participant. But lower courts have basically read solely out of Howey, at least for things like multi-level distribution pyramids, where participants do have to try to recruit more marks. Basically, Court of Appeals, 2nd, 9th, among others, have read solely as being more likely primarily or significantly, and SCOTUS hasn't disagreed. It discussed the issue in a 1975 opinion without taking a position. Given that what any individual staker contributes relative to the total sum of the efforts in the enterprise is probably quite limited, I suspect the solely equals primarily from the efforts of other elements is met. Now, none of this answers the trickier question, in my humble opinion, of who the issuer is when you're dealing with a decentralized system. But that's part of the broader problem of how to fit decentralized systems into a person-based legal system. So bringing up some other interesting points here, Crypto Nomad bringing up the obvious, Ethereum got a free pass for their first security offering. Not sure why they wouldn't get a second one too. Ethereum and the SEC are tight, likely because JP Morgan is behind Ethereum. Ethereum won't be decentralized, though, after it moves to proof of stake. Large whales, JPM et al., will have majority stake and control. So there's that entire issue as well. The other thing I wanted to bring up, guys, this from Stéphane Hubert, your blood will boil. Now, this is a great clip. 16 hours before the Hinman speech back in June of 2018. This is what happened. Only 16 hours, less than 24 hours before. The SEC's full commission held a public meeting on digital assets. Commissioner Stein stressed the importance of regulation that is not creating monopolies. And Clayton, he was the commissioner at the time, he stresses once again that every ICO is a securities offering.
Today, we have to ensure that the markets are reliable, they're trustworthy, they're fair, and competitive. I'm going to mention blockchain technology has been getting a lot of attention lately, and it certainly is underlying some of the important fintech innovations. And as we all look at these innovations, we need to constantly question, can it be used to enhance the quality of our markets and investor protection? Or the flip side of that, is there a way it could be used to monopolize markets or undermine competition? How should any technology be best deployed? Should it run by a public-private partnership? For example, like the internet. If the market begins to move towards blockchain technology, I think regulators do need to be in a position to lead, harnessing its benefits and responding quickly to potential weaknesses.
My question to you is, does the SEC have any official position as it relates to blockchain technologies? Because right now, without a lot of clear guidance, a lot of great blockchain technologies are moving overseas. How can we keep those technologies here in the U.S.?
Okay, we're going to have a breakout session on that as well, because I know it's a hot topic, but let me try and be quick. Blockchain technology has incredible promise for the securities and other industries. I think we can all agree on that. The cost, what blockchain technology does, among other things, but what's at the fore of my mind, is that it greatly reduces transactions costs, including the costs of verification. It's powerful technology.
Whoa! I'm just going to stop it there. Reduces the cost of these transactions and verification. Powerful technology. Why would the SEC then, I mean, fast forward to today, why would they be a proponent of Ethereum, which we know has these high gas fees?
That technology people have used to apply to fundraising. Fundraising is older than the commission. But since the commission has been in existence, we've had pretty clear, I'll say very clear, but I've lived it for a long time, rules on how to conduct fundraising when you're offering securities. Much of what I have seen in the quote ICO or token or ICO space is a securities offering. It is raising money for a project where I give you my money, you give me some type of right back that reflects a return on your project. That's a securities offering. And I don't know how much more clear I can be about it.
I don't know how much more clear I can be about it. Well, one thing is clear. I think we all know now that Ethereum was a securities offering back in 2014.
Right. So it's not the launch that we have. So we are going to start the Ether pre-sale in a couple of weeks. So the Ether pre-sale will be an opportunity for anyone to purchase Ether. For Ether is the internal currency inside of the Ethereum system, sort of like the XRP and Ripple.
Now, is there a big window of opportunity for people to get in, or
yes.
is there just like a one-day opportunity?
No, it's something we're thinking of. It might be 45 days, it might be 30, it might be 60 days.
Okay, so there's
And
plenty
we'll
of time.
have sort of
Yes.
an incremental thing, so the earlier you go
Yes,
in.
the earlier you get in, the better a price you get.
The earlier you get in, the better the price you get. So they had their initial investment opportunity, and then they were going to launch the ICO. I wish I had that other clip of Vitalik Buterin actually breaking down the ICO and calling it an ICO. I believe there's another clip floating around out there. This one I just remember from Crypto Law. Then there was this when he was on the Hardcore Crypto podcast.
Like ICOs, is it something that you anticipated at all? That at one point this could happen?
The Ethereum crowd sale itself was kind of an ICO, and then there were sales before that.
Exactly. The Ethereum crowdfunding was an ICO, and then there were sales before that. Enough said. Back to Stefan Hubert's tweet thread here. What an obvious market manipulation. Remember, Hinman did not share his speech with a single commissioner. It would not have been worth the time, but Clayton already knew at that meeting what was going to happen the next day. So again, just to put a timeline on this, guys, this happened Wednesday, June the 13th, 2018, and the Hinman speech was the day after. And best of all, Clayton says the biggest advantage in blockchain technology is the reduction in transaction costs. And which tech will ultimately get the SEC's blessing? The one with the highest cost for fees of all, as I mentioned earlier. Anyway, I think it's abundantly clear where this is going. Another point that Stefan Hubert makes here, another non-action letter for the Ethereum gang. Bill has issued a free pass to IMVU, and that is an ERC20 token project from the former managing director at Consensus. So also just to kind of add on to this, how deep the rot goes, director of blockchain programs at IMVU was also the managing director at Consensus, and as you guys can see here, directly from the SEC's webpage, IMVU Inc. response of the Division of Corporate Finance. Incoming letter dated, this was back from November 2020. Based on the facts presented, the division will not recommend enforcement action to the commission. So that had to do with this particular project. So getting free passes for not just Ethereum, but for this particular ERC20 token project. Obviously, we do see that connection with Consensus. Wanted to thank Stefan Hubert. Great digging, my friend. Wheezy at Nerd Nation Unbox. Also bringing this up, something tells me that the Winklevoss twins could have been in this meeting as well. Guys, this was from February of 2018. Listen to how they defend Ethereum, saying that it's been clear how regulators see Ethereum. They were also early investors in it. Hashtag ETHgate.
I think that what people are conflating recently is the ICOs, which are basically, they're all securities dressed up with cryptocurrency or a token. But it's, if it walks like a duck, quacks like a duck, like it is a duck, this is a very small subset of the underlying cryptocurrency layer one blockchains like Bitcoin, like Ether, which are Bitcoin, according to the CFTC, is a commodity, and it's been that ruling in that way since September of 2015. So U.S. regulators, at least, have been very comfortable with the legal distinction of what cryptocurrencies like Bitcoin and Ether are. I think there's no doubt that ICOs are definitely a distraction right now, and they distract from sort of the layer one protocol tokens like Bitcoin and Ethereum that are definitely commodities. They're not securities or companies just raising capital and dressing it up with a token. We have a portfolio of cryptocurrencies. We invest in Bitcoin, invested in Ether early on. So
they even admitted they were invested in Ether early on. So could the Winklevoss twins have also been in those meetings? Something certainly smells rotten, but that's just my opinion. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.